A lot of the young people, they're finding us through Reels, through TikTok, recommendations from a resident that might live there or an influencer or, those unique ways that you're now bringing people in because people really want to live somewhere based not even so much on how your website looks, but how they want to hear from the actual residents living there.
Hey everybody, welcome back to Wealth Unfiltered. I'm Samantha Parrinello, and I am delighted to bring on our partner with Viking, but the CEO of Pegasus, Jackie Ware. Welcome to the show.
Thank you so much for having me, Samantha. I'm thrilled to be here.
I am thrilled to have you. So Jackie and I have only met one other time in Phoenix in person, and I am so excited to have you on board. Just to give a little bit of background between our experience together, her company works with Viking Capital as the property management company. And so I thought, what a better person to have on the show to really explain the tenant experience, what you do, and how you really help us all go full circle as a company who doesn't actually have in-house property management.
Absolutely. Let's dive into it.
Sure. So one thing I read, and I saw this on your LinkedIn profile actually, and to me it was like the most perfect segue into the entire show, is you say on there, we make it easy to make money in multifamily real estate. And I love, love, love that line. So for me, the way I'd like to start is, can you tell us how the tenant experience and satisfaction directly influences the returns?
Absolutely. So resident satisfaction reduces friction. Fewer vacancies, fewer maintenance escalations, fewer legal disputes. And those things all straight translate to dollars. Happy residents renew more often. That lowers turnover cost. They also pay on time more consistently and are likelier to treat the building well, reducing in any long-term CapEx projects the site may need. So all of that brings us to a greater NOI and stabilized cash flow for the properties. So those things really drive the valuations for better returns for our clients.
Incredible. You're thinking about how people operate. I think a lot of times investors or sponsors don't typically start thinking about property management until they've already purchased the property and it's time to dig in. So one of the things I would like to think about from your perspective is, how do you think, or why do you think a lot of times property management itself is overlooked as a financial driver for multifamily?
I think it's mainly a driver because everything we do has to do with the NOI, right? So you want to make sure, happier residents, you have higher renewal rates, you have lower vacancy and lower releasing cost. On the revenue side, there are fewer concessions and faster releasing, reducing vacancy loss. So the expense side, lower turnover means fewer units turned, less marketing expense, and it lowers the administrative load on our teams. Even on a modest improvement in a renewal rate, let's say 2 to 7%, that compounds over time because it reduces unpredictable vacancy exposure and stabilizes the rent growth assumptions.
Oh yeah, I love that. Part of that really needs to be part of the acquisition process and the underwriting process and really knowing your market. So I noticed that are you mostly Sunbelt as well, just like Viking?
Yeah, absolutely. Right now we are primarily Virginia to Florida, over to Texas, and now we are in Arizona as well.
Amazing. So I want to dive more into Pegasus itself and also into your background. So I'd like to know how you first of all got started in multifamily.
Oh, so I like to say that I was raised in multifamily. My mother, Lindy Ware, she made her career in the industry. So it is everything that I know about a woman in leadership, right? She started as a part-time leasing consultant. So I started as a part-time leasing consultant. And when Lindy founded Pegasus Residential in 2009, I came on board to assist her. So over the last 16 years, I worked in almost every position within our company here at Pegasus, which has given me a vast knowledge of like the ins and outs of the assets themselves, our clients and what they're looking for as far as returns and asset preservation. And honestly, really on understanding how to manage our teams who are really doing the work day in and day out on the sites. So in 2024, when Lindy retired, I took over as CEO of the company.
Amazing. Well, that's an incredible journey. Since you began to now, how has Pegasus grown?
So we've actually escalated since 2024. We actually have an increase of 5,000 units, which I'm really, really proud of. We've done that through organic growth. We don't do a lot of advertising or anything like that. It is or PR. It is really from referrals or an outperforming in our markets is how we've grown the company. So we try to really be strategic about putting success stories out there in the different markets. And so that organically clients come to us on how are you beating me? Let us present to you. And that's really been our business strategy since the beginning. It's been pure organic growth.
That speaks exactly to how Viking found you, because our asset manager worked with you in an old life, where he was prior. And then we brought you on because of your reputation and how much he really enjoyed working with you guys, which, I think that speaks volumes, especially in this industry. It's very easy for people to play the blame game or to find somebody else to cause why I don't want to be with them. So for you to have such a great reputation and have someone like us, a billion-dollar company who's like, okay, we need to be even better. I think it speaks volumes to what you guys are doing there. And it's really exciting for us to have you guys on board.
Well, thank you. We love the partnership, and that's something we really try to set ourselves apart with our clients, is we really want it to be a partnership, understanding that each of our clients have different business strategies and oftentimes different business strategies within their portfolio themselves. So it's very important to us to connect as the operations team and with the owner on what do you really want to have happen so that we can be working seamlessly together. Because you're right, some markets, some situations, there's going to be challenges. But if we have a great relationship and a great understanding of what the overall goal is, we can really go through anything together.
Absolutely. So you all are a property management company. Your focus is on tenant satisfaction, but also creating and driving NOI growth for your owners and operators. So what do you think is the most common reason that you guys find that tenants are leaving?
I think oftentimes they're leaving because of communication breakdowns with the on-site team. They put in a request for something, it didn't get addressed. The next thing would be service request. They're not happening quick enough or timely enough, and streamlining all of that type of communication and process really helps. And also the third thing would be providing a clean environment. We always say clean is free. And to an extent it is, but people don't realize how much the resident really, really appreciates just having a really tight, clean breezeway opposed to anything else and having a debris filled area. So those are the main things I think really caused resident retention.
Incredible. So if you had, let's call it quick wins for making the biggest difference or having the biggest impact on your communities, what would it be?
All right, simple. 3 things. Streamline service requests, target small amenity refreshes so you can consistently have something exciting for those residents, and have a consistent outreach renewal program.
Okay. Can you kind of dive into that a little bit more?
Absolutely. So I think with renewals, it really can help you stabilize your property and give you control, because occupancy is king. When you have great occupancy, you can charge whatever you want for those new rents coming in, right? And oftentimes I see clients can get a little greedy on the renewals. Instead of rewarding our good residents who are already approved, there's no fraud component to be concerned about, there's no term cost, and they're paying on time. And so they themselves should get a little bit of a reward program for staying and being a long-term resident, and having really, really good communication with them so that you can address their issues so they will stay in your community. Having increased renewal retention is really everything in today's market.
That's very enlightening. I don't think I even realized that was a thing. And I think that's really, really cool and important. So talking more about Pegasus in particular and your philosophy, to accomplish these things that you're talking about, what is your philosophy on staff training, and how do you guys maybe do something different than other people?
Yeah. So for us, we have a very robust training program because, quite frankly, Samantha, a long time ago, I used to always hear I wasn't trained. And it became very painful for me. And training was one of the departments I was in. So one thing that we think here at Pegasus is that our property managers and our regional managers are the backbone of our entire organization, because we're an operations platform. And when those people know what they're doing and are empowered to do what they need to do and what they have experience in best, we get the best results. So we have it's actually a 60-day training program. Momentum training is what we call it. And we put our property managers through that, and it teaches them every single tactical and operational item that we have. It allows them to have a one-on-one connection with their corporate office support on a regular basis. And they also get the opportunity to go to group sessions where they can also learn from some of their peers coming on. We also have it set up where we can retrain on some things, because the first week is very, very overwhelming no matter what your experience level is. You're having to learn a bunch of new people, a new property, new systems. And right now, the tech stack for every operator that I know and that we compete with is very robust. And we must give people the opportunity to learn that to be successful in their roles. So that's kind of how our training is really everything to us. And we actually put all of our operations team, VP through property managers, all through that system, because if our VPs and our regional managers don't know how to use those systems, how can they fully support the property managers in that? So for us, training is everything. And I think we take a different approach because we do focus on making sure everybody understands all of our systems.
Wonderful. Well, that kind of leads me to my next question, because there's going to be areas, or I should say inefficiencies, that you guys see property to property. So when you are having your property managers go in and evaluate, where are some of the things that you see most often is like money left on the table? We have to fix this.
Absolutely. So I think, again, it's the poor renewal strategy. I think that's definitely something that people leave, they overlook it, and they don't put a great strategy in place. They're not able to capitalize on those retention returns that they're hoping to get. Also, they may be overpaying for reactive maintenance because there was no preventative maintenance plan in place. Ineffective vendor contracts, and then maybe poor ancillary income management. So where they're not really looking at, how are they advertising the storage units? Are there signs on them letting them know that they're available? Are they really, oftentimes when we take over, usually pet fees is a big thing, where they really haven't charged, the previous management hasn't charged everybody. So really just looking into the core things that we have in place and making sure those are being executed efficiently really uncovers a lot of money that people may not be aware of that's on the table. So my thought is do your own due diligence. We like to say, get your own house clean. That's what we say.
I will like that. Oh, that's awesome. Like you said, you have a large portfolio at this point, and then your portfolio obviously has several companies within it. So do you guys have, almost like a blanket system procedure, or is it really isolated? Every property is different. And then if so, how?
Yeah. So we have a blanketed approach to being able to turn assets around. That's one thing our company has done really, really well, taking an asset that's really struggled either with a lease up that's been a stalled lease up or a property that's struggled with occupancy. We're very good. So that is a blanketed approach. It's a templatized approach that we've developed here at Pegasus. And so but other than that, everything else is pretty much what the client wants. I mean, there's a lot of similarities in those things, but some people don't really care about occupancy as long as they're getting the rent rates that they want to be getting. So like I said, it really understanding what those things are helps us build a plan off of that to help them.
And is there a specific size to the number of units or property that you guys take on, or are you open to any size unit?
There's a minimum for us, or it has to make good business sense for us to take it on. So if it's a small asset and there's less than, let's say, 100 units, it just has to make sure it brings in enough revenue for us to be, to be good for us to manage. But other than that, we're very open to anything, but it just has to make good business sense for us. It is a lot easier, and everybody knows this in operations, but to manage something 200 units plus. It becomes sub 200 units. It becomes a little bit more complex, and you have to be a little more strategic and hopefully have economies of scale to really make sure those assets are humming and working efficiently.
For those people who can't, they're probably 100 units or smaller, who can't have a professional management team in yet. Is there a piece of advice that you would give those people for maybe how to optimize their properties?
Make reasonable, responsive predictability. So set service level agreements for your service request. Make sure that's being done. If you have great service request, times, you're going to be doing well. Automate routine communication. So renewal reminders, move in, move out instructions, anything that your team is having to do on a regular basis, automate it. And then track a handful of KPIs. My suggestion would be turnover, renewal rate, days to complete maintenance orders, and prioritize those actions with KPIs, and you'll be going in a much better direction.
Are you looking to build sustainable wealth and achieve financial freedom? Viking Capital can help you do just that through multifamily investing. With a team of seasoned real estate experts, Viking Capital conducts deep financial analysis and data-driven asset management to deliver outstanding returns. Their strategy focuses on low-risk opportunities with significant value-add potential, preserving your capital while maximizing long-term growth. Join them and be part of a success story. Viking Capital has acquired 30 properties and manages over 6,000 units, all thanks to their dedicated team and valued investors. Discover their current deal offerings at vikingmultifamily.com and start your journey to financial freedom today.
Okay, so you actually are making me jump ahead because you mentioned KPIs, and I have one of the things that I feel could be a blind spot for people who are not they're owners, but they're not operators, or they're not the property management side, and they want to maybe have someone like you on board to effectively watch what's going on to make sure that their asset performance is going well. Are there KPIs that you guys will follow and you'll give to the company and say, this is how you know if the asset is truly humming?
Yeah, so we call it doing health checks, and we have actually put in place with Domo as our partner on it and have our own dashboard for all of our operations team. And there's 11 KPIs on there, and it's anything from occupancy to pre-leasing to renewal status, 30, 60, 90 days. We also have open work orders, open positions. And if you can really look at that and start digging in to see, quickly check the health of the property. And then if there are any variances to the metrics that we have, then you can go ahead and start digging into what those facts are. But that's really how we manage our KPIs.
And in this, this turbulent or adverse, economy that we are in right now, where you are, especially in the Sun Belt, I think you'd resonate with this as well, where you are seeing, a lot of competition out there. So occupancy levels may not be exactly where you would have seen them 5 years ago. Is there a specific piece of advice you would give to property managers to help with that piece in particular, or is it kind of just wait it out?
Well, I think we all have to, when we're going to see better days ahead, right? It was survive till 2025.
Yeah.
Now, 26 is the fix, 27's heaven. And I think all those things are true just because we are purely seeing the product absorb here in the Sun Belt. So we know we have very desirable markets. We know after 2020, there was that huge shift of migration to the South, and there's just better economies for a lot of those larger corporations. So the fix is coming. Hunker down, hold in there. And my advice is really value the resident retention. And when you do that, occupancy is king, and you have better control over the community because you always have money coming in and less money going out.
Absolutely. Great advice. For people who we would kind of going back to before, where they're at the cusp of being able to bring on a property management company. Do you have 2 criteria that you would suggest any company should have these 2 things in their portfolio, or, some type of advice for picking somebody?
For picking somebody, I think you want to pick somebody who you feel you can trust that could be a partner for you, because there are going to be, it's property management and it's people on people, and there are going to be challenges. So is this somebody that I can get through a challenging time with? Will they listen to me, and will they give me recommendations? Will they help me lead me through this? I think that's one thing that people really want. And then 2, what does the company's SOPs look like? Because I know that not a lot of clients may ask about that, but that's very important. The company structure be very good, because the people that'll work there, turnover is very hard, and it's a big part of our industry. We've worked very hard to mitigate our turnover for our operations team by putting in great SOPs so that people have better awareness of what's going on, something to turn to when there's a problem they don't know how to solve happens. I take a lot of pride in that, because we actually just went through this huge exercise, and we had to turn all of our SOPs over, and they said, you guys have more SOPs than anybody that we have ever dealt with in our entire lives, which made me feel really good, because we try to do that. They're only created because there was a mistake made. And it's like, how can we make this easier for the next round, the next person?
Yeah, that's the best way to, like you were talking about automations, it's like human efficiency, right? So solving a problem before it happens. I am the queen of operations. If you ask everyone in Viking, it's literally the thing that makes me tick. So you are singing my tune and speaking my language. So I want to actually move on to You mentioned KPIs, but one KPI that I want to understand, if there's a way to track it, is tenant satisfaction across the property. What's the best way?
I think the easiest way to track that would be through your retention, right? That's going to be, and your renewal increase. Like if I can get a better rate for somebody and I still have high retention, we're obviously, tenants are very satisfied living there. The resident is very, very happy. I think it is hard, and I don't think enough people put enough importance on it, when you're seeing the reviews and how that really tracks to the new residents coming in and really has a direct effect on your occupancy and therefore your vacancy rate. But those things are a little harder to track and quantify. So that's why I think they get missed a little bit. But hey, your resident retention and renewal rates, that'll tell you everything you need to know if people are happy living there.
Absolutely. And you talk about people seeing you online and Google. What are probably the top 3 ways that people find your properties?
One, through a Google search. And it depends on the demographics of the property. We do different marketing depending on the property's needs. So a lot of people are finding us because of apartment.com's CoStar's huge investment in their platform, even with commercials, things of that nature. That's the number one for us. And then secondly would really be through a lot of the young people. They're finding us through Reels, through TikTok, recommendations from a resident that might live there or an influencer or, those unique ways that you're now bringing people in because people really want to live somewhere based not even so much on how your website looks, but how they want to hear from the actual residents living there.
So do you have, and I don't even know if you're allowed to, so this is just a question you made me think of, but do you all have maybe a way to get more engagement online through for your tenants with Reels or to have them kind of help you with that? Or is that just an organic thing that happens or it doesn't?
It really kind of happens or it doesn't. I mean, we've used influencers sometime at certain properties if it's the right marketing strategy. And that's really helped us. We've also done it where it hasn't helped us. So it really kind of is right now about how can I connect to the resident and what's going to work with that, or my prospect, how can I connect to them?
Yeah, that makes sense. And is there one market that you're finding is the hardest to keep your occupancy, or is it just all the Sun Belt right now because of the oversaturation?
I think it's pockets, like, right, we are in a Georgetown, Texas, that's a challenged market just purely because of all of the great growth they've had there. So really getting ourselves stabilized was a much longer road than we wanted it to be. However, we reached it, and now it's the strategy to stay stabilized, right? But like, I can't say all of Texas is like that because we have properties in San Antonio and Houston that are fine. So it really is, kind of market specific where there's just been an growth of properties right now. Again, they're filling up. So we are seeing across our portfolios everywhere, rents are raising and occupancies are raising. But,
okay. Well, that's, for
for
people listening, that's good news.
yeah, I mean, it's not exactly where we want it to be yet, but it is, you can see the light at the end of the tunnel now. And you can see, and some markets really are, they were really, really hard for us. And now they're coming out of that and are fine. We had that like in Savannah. It was, there was a lot there as a tertiary market and a lot got delivered. But now we're seeing it and, everybody's kind of stabilizing at once and it feels really good again. We can start raising rents and we're in a much healthier place.
For people who, the time is kind of the essence, they don't have time to kind of wait for things to stabilize on their own and need to implement concessions. Is there a base concession that is normal, or how do you go about finding which one is right for your property?
You really have to dig into the market data. And that's honestly, unless you have historicals, if you have the advantage to have been there. But really, the current time right now, if you are in a market that is overly saturated, there's no perfect concession. It's going to be the concession that's going to work against what your competitors are doing. Trust me, no one wants to do concessions. We don't want to do concessions, but sometimes it's the reality as it is of the market. So what we try to do to help our clients see that we're not just trying to make up a concession or make our jobs easier, we try to really put in the market data. We partner with Apartments IQ for that, and we're able to see, historic through the year of how our competitors, what they've leased at, what their concessions were, what ours are, what theirs are. It's all live data. It just kind of brings it into one dashboard for us, and it really allows us to give really strong analytics to our clients so they can understand the decision.
Is something like that available to owner-operators?
Yeah, so we pay for it. So it's a paid cost, but yeah, it's available to anybody. It's a great service.
Incredible. So for more people who are listening, so I'm sure you know, but a lot of our listeners, of course, are passive investors who are investing in our deals, but we also have a lot of people who manage their own properties. And that's anything from a duplex up to like 50 to 75 units. Some people, 120 as well. But is there a piece, maybe a couple of red flags where you're like, if you're seeing this happening on your property, then you guys need to be making a change?
Delinquency rising. I think one thing that often gets, if you're in the Sun Belt, if you're in Atlanta, if you're in Houston, but fraud mitigation is a big thing. And really, several years ago, it wasn't like it is now. And it has just completely taken over our industry, just like it has for everything, not just multifamily. But if your delinquency is continuing to rise, you more than likely don't have the right fraud mitigation in place.
And do you have any tips for that or resources?
I do. There are a lot of good vendor partners that we have. I think we use almost everyone out there, to be honest, just depending on what our clients want. But we one of the biggest partners we have is Snapped. We use them. They verify that the tenant documents are legitimate and have not been altered. So therefore, they can look at all the income and make sure you're not getting some kind of falsified documentation.
And can you explain that? Because I was listening to a call where that was being chatted about, and I didn't realize people were doing that. So for delinquencies or fraudulent, I guess, loans or, applications, can you talk about what you guys are seeing on the property level and how to maybe isolate that?
Yeah. So, and again, you have to find the vendor partner that's going to be work for you. There are countless ones out there who do a really great job. Get 100 does a wonderful job, but they're doing false IDs, and our people are not detective, right? They're not detectives, and they look very legitimate. So fake IDs is one thing. They're altering their income or bank statements or putting in fake offer letters, whatever it may be, to alternate their to make it so they can qualify. And then they're also stealing people's credit. They're stealing their social security numbers. And you got to look for that kind of fraudulent activity as well. But those would be the main areas. So identity with the ID, the social security numbers, and then the income.
Wow. I really didn't know that was as easy as it sounds like it's become because it's happening more and more.
Yeah, it's a cottage industry, and they are very, very smart, very sophisticated. And as we have grown in our industry with better software, they are outsmarting it at times. There are TikToks on how to, I guess, outsmart some of the more popular fraud mitigation and multifamily, but it is something we're seeing across for various reasons. Some are, people that just want to do bad things. Some are really people who were put in bad spaces, maybe after 2020, lost their jobs, and now they don't have the credit to get in. So there are various reasons, but it's a lot easier than it's ever been to fraudulently apply for an apartment.
Wow. Well, that's a really good insight. And I'm sure if you all are seeing it, everyone else is too. So I'm very, very glad that, you were able to touch on that for our listeners. And I do want to respect your time. And I'm really, really grateful for you being here. So what I want to do is ask you one last question.
Okay.
And it's about future trends. So my last question for you is your team, they are the eyes and ears, they are on property, they see what tenants want. And so as you look to the future of 2026, is there a specific trend or something you're seeing that people who are either own a property and are implementing changes or looking to acquire should be looking at for 2026?
We've been talking about it for years, but it really is about people connecting to your property. So resident events are huge. You can even do what's been very successful for us is honestly like a Sunday breakfast because or Saturday breakfast, because breakfast food is typically affordable for the properties if you have various price ranges, and people will come, they're there on the weekends. Oftentimes we see people having events and it's when people are still at work. So people are home on the weekends, they can engage with each other. If you have a sense of community there, you will stay. And I really think that things different per market, right? Like the younger renter may prioritize the smart tech of things. and flexibility maybe with their lease. They don't want to commit to a year. Those are for some of the younger renters. Then long-term renters probably prioritize stability with the on-site team and good customer service in the relationship they have with the on-site teams. So I think it's really about knowing your property, knowing its story, and what those residents really want, and making sure that you are meeting their needs and you're not assuming what their needs are.
Incredible. Well, Jackie, I am so grateful that you took the time today to join our show. And to our listeners, thank you for tuning in. Thank you for tuning into this episode. We truly appreciate your support. Don't forget to subscribe, leave us a review, and share the podcast with your friends. Until next time.